Hello traders, welcome to the Elliott Wave Analysis.com. This is Henry giving you an update on the gold to silver ratio. Now a few months ago I made a video about gold to silver ratio, and I explained that this ratio, which is the top chart here at the top, this ratio is going to be very important for us to time the turn in both gold and silver. As we can see, if we overlay gold to silver ratio with gold in the middle and silver below here, we can see when the ratio goes down, gold goes up and silver also goes up. Okay, now silver especially goes up more than gold. In a multiple of the same rally in gold is going to be multiplied with silver. So silver is going to be moving up a lot faster as the ratio goes down in favor of silver. Now inversely, when the ratio goes up, we can see gold also goes down and silver goes down even faster than the rally in gold. It has always been like that. When the ratio goes up, silver goes down faster, okay, than gold. And if the ratio goes down, silver is going to rally faster than gold. All right, now we see the inverse correlation there, and the question is, what are we going to see with the next kind of future move, right? We can see, if we take a look at the gold to silver ratio here, we got like a triple top, if you want to call it that way, around 85. Now remember guys, historically the ratio is around 40:1. So this is towards at the high end, 85, and then now currently is at 74. Okay, and also the natural ratio, which is the real gold that you can find on the Earth's crust versus the silver, okay, the natural ratio is closer to around 10:1. Okay, which means that every ounce of gold, for every ounce of gold that you mine from the earth, you can find about 10 ounces of silver. Now the question is, we can see here not only that we got triple top, we are at the high end, but it looks like it also breaks down from this channel here recently in 2016. So now, if you believe that this ratio here, the ratio as far as it stays below this peak here in the February 2016, there's a chance that this ratio finally is going to turn lower. Now when this turns lower, that will be the time when gold is going to start rallying. Okay, that will be the time when silver is going to start rallying, because remember, when this ratio goes down, gold XAUUSD goes up, silver XAGUSD goes up. Okay, so that is the correlation, the inverse correlation in the ratio and the underlying physical metals. All right, now if I look to the daily chart of the gold to silver ratio and trying to figure out the sort of the short-term and medium-term direction, okay, this is the daily chart. Now we can see from the peak here, which is in February 26, okay, this peak here, I label it as 0, the starting point. That is the peak that we saw earlier here in the February 2016. That's when the gold to silver ratio made significant peak here, and then starts to turn lower and break this channel. Okay, so if our starting point is from here and we try to label this move here and then the subsequent bounce, let's go back to the daily chart. So right here we can see that the pullback is in 3 waves or 3 swings, and this is 100%, okay, extreme area, and then the bounce from there has been pretty choppy. Now this is a characteristic of some sort of a corrective bounce, right? Very overlapping, very sideways. So it does look like this could be only the first leg of this pullback at the least, meaning that this move here only the first leg of the pullback, and that we can be, as long as it stays below this one, the February 2016, we can get at least one more boost on the downside. Again, this bounce so far, when it bottoms in July 2016, has been pretty sideways and choppy, and then lately it sort of breaks this previous high here, and that suggests that this ratio has more room to go to the upside. So we can see we got this W, and then we got this X, and then it looks like it's doing some sort of a flat from here EP1, 2, 3, and then now we can get a pullback in the wave 4 and another leg higher in the wave 5 to reach the extreme area. Okay, from here, then that will end the bounce, okay, the correction. Now again, as far as it stays below this one, okay, this is 85, I believe, 85 points, sorry, 83.73. That is the high in the February 2016. So as far as it stays below there, then this ratio from here can start turning lower. Okay, so when this ratio turns lower over there, that will be the time, going back to this correlation analysis, that will be the time when we can expect gold and silver both gonna go rallying. So what does that tell us in the short term? In the short term, when the ratio, because the ratio looks like it can still extend higher towards 76.5, this means that both gold and silver probably still can see more weaknesses in the coming few sessions or few weeks. I don't know what time it takes, maybe a few weeks to a few months, you know, like 1 to 2 months after the ratio reaching here and starts turning. That will be the time when you know, gold and silver likely can find support and continue higher again. Alright, so I hope that you enjoyed this analysis, and for similar analysis and also some trading ideas, feel free to join our service. We got 52 instruments that we cover in 4 time frames, and we provide the Elliott Wave forecast chart in 1 hour, 4 hour daily and weekly, as well as a 24-hour chat room, and also the live sessions and the live trading room. You can try our service 14 days for free and see if we can help you. Thank you very much for watching, and see you all again later.